FedEx, another household name. The stock is down big on earnings. The stock has been an inline performer with the S&P over the last 10 years and no better, despite the fact that e-commerce has exploded. Let's take a look at what the stock chart has done and then go into the numbers as to why all that's happened. Here's the earnings move in FedEx, up here around 300 bucks going out last night, trading about 258 this morning. It bottomed out down about 40 bucks or 14%. Huge miss in earnings. Let's take a look at what's going on the 5-year chart as well. First of all, you can see the most interesting thing in the stock chart obviously is the COVID era, right? Right down here in the low, the stock bottomed out right around $100 like everything else did. And then a very steep slope up to 300 bucks here. Essentially, this was the best time to own this thing on outperformance because expectations were that e-commerce was about to explode even more. It had already been exploding for years. And FedEx was going to take a huge piece of that. Let's take a look at the numbers as to what actually happened at FedEx. So let's go all the way back almost 10 years ago to 2015, right? This is when Amazon was truly exploding, when we were getting all of these packages and everybody thought that everything was going to come through e-commerce and that FedEx and UPS were going to take massive share in this industry. You've got a company here who's doing decent, 50 billion in revenue. Margins in general in this business are pretty tough. The planes are expensive, the trucks are expensive, the union workers inside the trucks and planes are expensive essentially, and they only get about 6% net income margins here. But they are cash flowing and they're doing everything they can. But what the real story is in 2015 is you've got to expect that 20% growth in e-commerce or more is going to trickle to this company and they're going to have really strong revenue growth over the next 10 years. Let's take a look and see if that happened. Did the revenue grow? Short answer is it did, but not as even close to as what people thought, right? So we were looking at 47 billion in revenue back in 2015. That number is now about 90 billion. So it's roughly doubled in that time frame, which is about a 7% growth rate each year, essentially. E-commerce grew at a much faster rate. Why did FedEx not take more share in a 20% e-commerce growing? Well, the short answer is Amazon. Amazon, which is the behemoth in the industry, delivering itself, was a huge blow to FedEx and UPS and competitive in a way that most people in 2015 didn't think of, right? The same is true for the US Postal Service. They were thought of as a non-event back then, that they were going to have no share whatsoever. They've jumped into it, and between those two competitors, this has actually become a really competitive industry, which is why FedEx only grew at roughly in line with the S&P 500. So what to do with FedEx going forward? The stock is not incredibly expensive, but it's not really growing at a high rate. It's got a cost structure that's given to it. These planes are expensive, these trucks are expensive, right? The next positive catalyst for margins is probably self-drivers, but we all know that that's going to take decades to expand here, right? So we don't really love FedEx here. We would love it at a very cheap price, essentially. We think it's essential to what's going on in the e-commerce land, but we don't love it unless we're getting a really, really attractive price to us, which at this, it's just sort of a fair value. This isn't enough for us to want to get in, but a little bit lower, we definitely would. Thanks for watching. We appreciate everything you do. Hit us with comments, hit us with the likes. We appreciate all of that stuff. We'd be happy to go through anything for you, and thanks.